Good morning, everyone. My name is Wendong Zhang. I'm assistant professor of economics, and Brett, there's a binder there. So everyone should have a binder of the results. And today, I'm the lead researcher of the annual ISU Land Value Survey, and today we are here to talk about the recent survey results. I'm afraid I probably don't have the news that everybody want to hear. But let me get started. So here's the outline. I probably will mainly talk about the results, but I will give you some ideas of how I think what's driving the land values and how bad the decline is. And I will also remind you that we have developed a fantastic web portal where you can see and visualize the land values over time and across space. But before I get started, I want to give you some introduction of myself. I have been introducing myself as a new McDuffie for a year now. I think it's still the most effective way of letting people know what I'm doing. But I always want to try to lower the expectation for my audience that when Mike retired in 2013, he has accumulated over 30 years of experience. And today I'm still 29. I will turn 30 next month. So you really need to lower your expectations. But while no one can replace Mike Duffy, I'm the one you got. So I want to give you some introduction of some of my background. I grew up in a rural county in northeastern part of China called Shandong province. So it's the same province where Confucius is also from 2,000 years ago. So I hope I can borrow some of the wisdom. And the rural county by Chinese standards has 1 million people. So roughly a third of Iowa's population. And there's 100 million people in my province, in a province with the size roughly the same as Iowa. And there's actually 100 million people who share the same last name as I do. So I got my PhD just a month before I started at ISU. So I got my PhD from agricultural and environmental economics from Ohio State. How I get into the business of doing land value work is in 2012, I worked as a summer intern in USDA Economic Research Service, where we're working on a research project analyzing what's driving Western Ohio cropland values. So specifically, we were analyzing how the Great Recession and the housing market bust are impacting land values near urban areas. So that's how I got into the business. And here at ISU, I mainly work on three kind of things. The primary one is farmland related, so farmland values. And next year I will be doing the Iowa Farmland Ownership and Tenure Survey, which is conducted every 5 years as well. And on top of that, I also analyze how agricultural production is linked with environmental quality, especially water quality. So my dissertation focused on the Lake Erie water quality. And as a Chinese native, with the Iowa governor going to China as an ambassador, I can boast my credentials of being able to read the Chinese newspaper as well to talk about Chinese agriculture. So I actually am starting a quarterly series in ISU Extension and Outreach Ag Decision Maker on Chinese agriculture to talk about various aspects related to Chinese agriculture and Chinese economy in general. And I think maybe later this week and next week, you will see a paper on Chinese new corn policy. But before I do that, I want to give you some Chinese geography orientation. Here is a map of China. All the colorful ones you see are the provinces. So where I'm from is the star where you see in northeastern part of China. It's actually a county that shares border with 3 provinces. So this is a county located in the western part of a coastal province. So back 20 years ago, South Korean CEOs would fly to my province to play golf and then fly back, and still it's cheaper than playing in Seoul. So, but now I think with the rising labor and rising the machinery and other things, and Chinese labor are no longer that cheap either. But on the top right is the agricultural scene from my grandpa's village, where you see is all the greenhouse productions, and on the lower right is my uncle holding his grandson inside this greenhouse. It's the cucumber production. They also grow honeydews, which they ship to Japan and South Korea. So actually, my grandpa's village is an excellent example of how Chinese agriculture, at least in my part of the world, have shifted over the last 25 years. So 25 years ago, so the climate is roughly, and the latitude is roughly as Kansas. So 25 years ago, everyone is growing wheat, corn rotation. Now, 15 years ago, everyone switched from wheat, corn rotation to consumption grip, so table grip consumption production. So, but roughly 5-8 years ago, the whole village switched to greenhouse production into growing cucumbers and honeydews. So the great things about this system is you can now make 10 times of the income compared to wheat and corn rotations. But the bad thing is there's no day off at all. So I was talking with the farmers last week and in the weeks previous than that is you don't have any downtime to attend the lovely extension meetings because you have to work in the greenhouse every day. Right? So, but look at where my hometown is, the start. If you go north, 3 or 4 hours later, you will reach Beijing. You go northeast, you will reach another mega city, which they have roughly 20 million people, or close to that. So that's why you can make the transition. Today we will be talking about farmland, and if you think about farmland as agricultural real estate, when you talk with any real estate agent, the term they talk about most is location, location, location. So when you're thinking about the production system, it's the same way as well. The reason why my area could conduct this transition is because it's close to the urban destination markets. But I will also argue that with the development of the high-speed rails and bullet trains, like in one of the areas, like in this area, so in the southwest of China, it used to take 30 hours to get to the eastern coast by going north and then south by train because there's plenty of mountains separating these areas with the coastal area. But now China has the money and especially the technologies to build the high-speed rails which can cut through those mountains. Now the travel time has cut into from 30 hours to 6. So now if you're growing something, you can suddenly, the coastal Shanghai is suddenly, you can imagine this as the destination market, especially for some of the high-end niche market. And that's actually is happening for the top 1% are willing to pay the airfare to get the same day slaughtered beef to from a different province 1,000 miles away to their dining table. So so again, China has a lot of in common with the U.S. and I will talk about probably over the next years, and I hope what your reactions after the presentation are different from my farmers' audience. So I have been presenting land value work over the last few weeks. I find the 80% of the questions I got afterwards are about my introduction slides about China, not about the land value. So let's see how this time it goes. But today I'm going to talk about the ISU Land Value Survey. It's a really well-established survey. It's the first survey in the nation which got started in 1941. So it's a opinion-based survey. It's mainly, the sample is mainly agricultural professionals. So agricultural professionals include farm managers, appraisers, ag lenders, brokers, and the county assessors and ag salesmen and things like those. So we added an online mode since I took this position 2 years ago, and roughly half of all respondents over the last 2 years have been participating in this online. So it's easier for the respondents and easier for the data entry and free of the errors as well. So this year we got an even bigger response, surprise to me, than last year. So we got 518 respondents providing land value estimates for 711 counties. So each respondents are allowed to provide more than one county. If you do it using the paper, you can at most do 3. If you do online, the limit is 15. So we got some really well-established appraisers, especially in a southern part of the town, like including one of the down Foley here in the presence and giving us more than 5 or even 8 counties. So we really appreciate this help. And this survey has been distributed through the web link to Iowa Bankers Association and the Iowa chapter of American Society of Farm Managers, Rural Appraisers. So a lot of those, and FSA as well, so a lot FCS, a lot of those organizations really helped us to get this respondents to participate in this very important survey. So here are the breakdowns of the respondents. So when you are looking at the respondents, I have 2 breakdowns where you have the breakdowns by mode, whether they completed by paper or online, and also across the 9 crop reporting districts. So when you are looking at the number, the majority of the respondents are coming from the northern part. There are more ag professionals in northern district compared to the southern district. So every year I actually have to make some calls and make some individual contacts to make sure that we got a decent response for the southern district. But I think this time we got a pretty good job. And overall, I think there's a half and half in terms of people who participate online and by paper. And when you are looking at the respondents by occupation, ag lenders account for the largest group that we have. And they are especially heavily concentrated in northeast Iowa and west central, which so explain that there's Iowa City and Cedar Rapids. So in the urban areas, there are more lending institutions. And the other large groups include farm managers, appraisers, and broker and realtors. So these account for over 80%, roughly 80% of all respondents. When you are looking at how many years of experience and how many counties they provide a professional service, this is a new question we added this year. And you can see one of the striking ones is we do have a very small slice of respondents who are primarily farmer and landowners. They have over 40 years experience. They have been farming for a really long time. And when you're looking at how many counties they cover, the county assessors typically only cover one county or know another one. So, but when you're looking at our predominantly the bulk of the respondents, the ag lenders, appraisers, farm managers, they know even more than 10 counties. That's why we want to use a sample of the ag professionals, because they know the land markets. They have been to the farmland auction. They know not only one particular parcel where they own or they rent from, but also they know the general markets. So that's why we have those. So when you're looking at the years of experience, our respondents are very experienced, over 20 years, 25 years of experience, especially for those in northwest Iowa and north central Iowa. We might have like a succession problem because they're slightly older, I think. So I think that's in line with the trend. In Iowa, half of the land actually are owned by a landowner who are 65 or above. A third of the land are owned by landowners 75 or above. This is 2012 number. I'm going to do the next round of the survey next year. I think this number probably will even increase. So regarding the land value survey results, what we are seeing is a number that a lot of people already expected. So essentially, Iowa land values have been declining for another year. This is a 3 year in a row. So there's a 5.9% decline. Now the land value stands at $7,183 per acre. So this is a state average across all land quality. And in the ISU land value survey, it also includes all crop types. So it includes not only cropland, but also other land like pasture and timber as well. So there are breakdowns in terms of the land values by land quality. For high quality land, it declined by 6.5%. So slightly higher than the state average. And the medium quality declined by 5.9%. And the low quality land only declined by 3.5%. So we can see later there are breakdown by crop reporting district that why the low quality land is held better is because in addition to the commodity income derived from the corn and soybean returns, there's additional income sources from the recreational demand, but also the high CRP payments. So when you're looking at the government program, conservation programs like CRP, Conservation Reserve Program, their payments are linked with historical crop prices. So they're looking at the last 5 years of crop prices. Although corn prices are really low now, the $6, $5 corn is still factored in when they're calculating the CRP payments. So that which will be translated into eligible acres in the low quality land, which includes the pasture and timber. So when you are looking at how significant this decline is, here is one figure that shows you how farmland values in Iowa have changed from 1941 to 2016. You see we are no longer in this upward trajectory. The land markets have been taking off in May 2000 due to at least 3 factors: historically low interest rate, the strong ethanol demand, and also the great export demand from countries like China. Now when we are looking at the land markets, so back in the 2000s, consecutively for 8-9 years, the farmers in Iowa, Illinois, and across the Corn Belt has been making money every year almost. That's the industry average. And so everyone can make profits during those years. And what happens during those years is everyone, not only across the US, but also across the globe, is trying to increase corn and soybean production to get a hold of these profits, to chase after these profits. Now what we have is an overproduction, oversupply issue. So the demand has been growing at record levels. The demand for both the crops and for corn, soybean, and also for livestock are phenomenal. But because we had this really high profits, everyone is trying to increase productions when you're talking about China, Ukraine, U.S., and even Dakotas, they're all increasing corn production, which gave you a bumper crop, but also drive down the prices. And when the prices goes down, as the land assets with the commodity crop as the market fundamentals underlying the asset values, it's rational for the land markets to adjust. Another thing I want to point out is how significant this is when you're looking at this figure shows you the percentage change in Iowa land values on a year-to-year basis. So from November last year to November this year, from 1940s to 2016. So notice there are two colors, the green on the top and the red in below. So the red represents the decline. So when you're staring at the number in the last 3 years, it's 3 red bars in a row. So the land markets have been declining 3 years in a row. It's not being seen since the 1980 farm crisis. So this is the first time that the Iowa land markets have been declining 3 years in a row since the 1980 farm crisis. So this alone gave a lot of reasons to many folks in the ag sector to worry whether we are seeing a replay of the horrible 1980 farm crisis. I will give you some evidence later, but my feeling, at least now, is we're better suited this time. We probably won't see a replay of the 1980 farm crisis. There are some predominant reasons. One is we have accumulated really high amount of income consecutively in the 2000s. Two, we don't have the 20%, 15% of interest rate as we had in the 1980s. Three, we also have less debt compared to the 1980s. And I was talking with Jennifer earlier that you could loan up to 85% of the collateral value. So you have inflated land values in the 80s, you can loan 85% of the offset. Now you can at most loan up to half of the amount of the cash flow supported land values. So if the effective ratio probably is 40%. So the amount of the leverage is low, but also we have a stronger government safety net. So in the 80s, the crop insurance covers only half of the acres in Iowa. Now it's looking at is over 90% for both corn and soybean. So for that reason, I think we probably won't see an industry-wide collapse of the market, but does that mean there's no problem for everyone? It's definitely not. So especially for those who borrow too much and either on machinery or overexpanded, then this time probably will be tough. So beyond the state level, the land value also give you land value estimates at the crop reporting district level, but also at the county level. So when we are looking at the land values by crop reporting district, the take-home message is all 9 crop reporting districts show a loss. There's no district that got spared this time. So remember last year, Northwest Iowa actually reported an increase from November 14 to November 15 due to a really strong livestock returns. Now, not only the crop prices stayed pretty stagnant, the livestock returns are no longer there, and some producers, especially the hog producers, cattle producers, are reporting losses. And if you look at the livestock prices, all dairy prices, hog prices, cattle prices all declined by more than 30% compared to 2 years ago. So those, when the market fundamentals change, when the crop markets and the livestock market adjusts, the land markets responded. So this response is there's a roughly a 6% decline overall, and where the West Central and Central Iowa actually report a slightly higher decline because their primary source of income is still derived from crop. So here's a distinction that when we're talking about 9 districts, I was in Ohio 2 years ago. Before I came to Ames, I thought Iowa's flat cornfields all around. So when I was driving from Columbus, Ohio to Ames, Iowa, I find out that Illinois actually is way flatter than Iowa. So when you are entering eastern Iowa, you see more rolling hills and dairy cows and things like those. So I visited Decorah this May, and I saw with my 2-year-old daughter, and she was fascinated by the cows and also the automatic milker. But that shows you that even for a predominantly agricultural state like Iowa, there are substantial variations when you are thinking about what you see in the agricultural scene. So when we are talking about, this table shows you how the crop and livestock animals are distributed across Iowa. This is the USDA number, is the 2012 number. This essentially shows that northeast Iowa accounts for half of the milk cows across the state. So when you're talking about the dairy sector, that's northeast Iowa and northwest Iowa. Which means when you are looking at the land values in these different areas, they have different sources of income. So dairy markets will affect northeastern Iowa more, and the corn production, the corn market's fluctuations will impact districts that relies on crops more heavily, which in our case is the western, central, and central. That's what you see in the land values where they're reporting a higher loss because they continue to see a decline or a negative margin phase in the crop production where the prices is not enough to offset the cost of production. When you are looking at the land values in terms there where the bright spots are, it's in the low quality land in southwest and south central. Again, it's due to the strong recreational demand, but also the CRP payments, and relatively the livestock returns are better compared to the crop returns. So although they are diminished and even compared to 2014, but still relatively it's better than the crop. That's reflected in this. And later I can show you Chicago Fed actually reported there's a 2% increase in the southern districts over the last quarter in terms of the land values. Another factor why the land, when you're thinking about the 5%, 6% decline, it sounds scary that the land markets have been declining 3 years in a row. It's the first time since the 1980 farm crisis, but we declined from a peak. So when you are talking about, when you are comparing the land values with what happened 10 years ago, it's still more than double the land values 10 years ago. It's only 18%, 20% off the 2013 peak value. So it didn't decline that much. One of the big reasons why this is still hold pretty robust and steady, one is due to that I talked about the strong income accumulation that the farmer enjoyed. When you're, I think 3 months ago, there are still sales in northwest Iowa, and the farmers are willing to pay $15,000 per acre. I personally think this price probably is too high, but it shows some of the farmers at least still have some working capital to burn through. Two, I think now I will show you some of the figures that in the down year, typically the land supply tends to be low as well. The limited land supply will also help bolster the land values. But that's the crop reporting levels, and there are 4 there are 4 data sources for ISU land for Iowa land values, Iowa farmland values. In addition to the ISU land value survey, there are Realtor Land Institute surveys, Chicago Fed surveys, and USDA surveys, and our results this time echo with others. So when you are looking at the numbers, on the left is the Realtor Land Institute numbers, on the right is the new ISU land value survey. Our estimates is slightly lower, is more modest compared to their estimate. I think that's consistent. That's when you're looking at the data historically, that's the way it is as well. They're reporting a 9% decline, but we agree on the direction. When you're looking at the number, all districts from both surveys reported a loss. Another survey that from Chicago Fed is Chicago Fed reported there's a 5% decline in land values, very close to what we reported from October to October. What is more interesting is the red circle I highlighted in a graph, where you see the top number above that is the changes in land values over the last quarter, from July 2016 to October 2016. These 3 circles shows in central Iowa, in south central Iowa, and in northeast Iowa, Chicago Fed actually reported a mild increase recently. I've been talking with some of those auctioneers and farm managers, appraisers in southern part of the state, and they're talking about the same phenomena as well. When they go to an auction sale, they didn't feel a decline at all, in part due to the limited land supply. But also, there are some hopes, and when you're looking at the commodity prices, there are some hopes of a slight increase in the crop prices. So the soybeans may maybe even be break even, not in the negative territory next year, especially if you employ some marketing tools. So, and you can see that we asked them to predict how the land markets will be next year, and people in the north central and south central Iowa are forecasting a slight increase. They are more optimistic, maybe by the recent phenomena. How strong this growth might be, it remains to be seen, but it seems there might be some positive signs going on. This is another data which shows you by USDA. So USDA survey shows the land value changes from June 2015 to June 2016. It's hard to see, but it's roughly, they're reporting only 2% decline. I personally, I will not discredit USDA, but typically their numbers are 1 year off. They have a 1 year lag in their surveys. When ISU and University of Illinois reported that the Midwest land markets peaked in 2013, USDA survey reported they peaked in 2014. So I think probably next year they will report a greater loss. But I think in general, what you're seeing is the consistency among all surveys, which shows the land markets continue to adjust downwards. And a unique feature of the land value survey in Iowa is the ISU land value survey is the only one that gives you land value estimates at the county level. And if you go back to later, if you go on the portal that we highlighted, we offer the land values at the county level since 1950. Here it shows you the nominal land values by county as of November 2016. The more red you see, the higher the land value would be. The bright yellow down south is the lowest category. So the ranking is actually pretty consistent. Scott County continues to be the highest county in Iowa. Decatur County is the lowest county, the county reported the lowest land values. So Scott County also it's one of the rare counties that enjoys strong urban influence through the proximity to Quad Cities, but also proximity to the Mississippi River as the major transportation channel. So when you're looking at where the higher land values are, that's the northwest Iowa, because they are the high livestock returns and also the high land quality. So if you try to overlay this map with the soil productivity map in Iowa is a CSR2, so corn suitability rating, you will see they match pretty closely. So in the southern part of the state where the soil quality is lower, they have a relatively lower per acre land values. But it's a different story when you're looking at the percentage change. This is the percentage change in land values from November 2015 to November 2016 on the county levels. First thing to say is there's no county that reported an increase. So all county reported a loss from last year, ranging from 2% to 9%. So here, the red you see is a less decline. So the dark red in below is where you see like the smallest decrease. So that's a 2% decrease. That is consistent with what I showed you in the Chicago number, where they're reporting a smaller decline and even a recent ramp up in the central area. So where you see the highest decline are in the central area where it relies more on corn and soybean production. So that's the raw. That's essentially the land value number at the state, district, and county level, and we also have some information on sale activity. Who are the buyers of the land? Who are the sellers of the land? What are the positive factors, negative factors, and how people are thinking in terms of land values, in terms of corn and soybean prices. So here are some of the information. But before I go on, any questions, feel free to interrupt me anytime and ask questions. I actually broke my voice 2 weeks ago, so I probably appreciate the break. Shows me I'm still a rookie. Gene.
You mentioned Scott County as the top. It's been that way quite a few times over the years. It seems like in recent years it's been kind of between Scott and O'Brien, the two parts of the state.
Yeah, I think the top three are Scott, O'Brien, and Sioux. So that's consistent. So that's when you're looking at where the high land auction sales are. That's where you see. So especially but Scott is kind of an outlier in the eastern central. But when you're looking at the majority where the higher land value counties are, it's in the northwestern corner. Yep. Amy.
The Chicago Fed data showed
Uh-huh.
a few other states,
Yep.
mostly to the east. Are you in a position to say whether that would be true across sort of to the west as well in the Corn Belt? Kansas, Missouri, Nebraska, and then related, those factors that you think will keep us from the kind of doldrums of the 80s, would those factors also apply throughout the region?
So the I states, the I states, Illinois, Iowa, and Indiana, the land values follow pretty closely. If you look at historically, they track each other pretty closely. And which is understandable because they're driven essentially by the same market fundamentals. When you're looking at the the Great Plains, they're not in the 7th district, it's in the 10th district, so it's a Kansas City. So they reported, the Kansas City land value reported a decline in all, not only non-irrigated land, but also irrigated land and the pasture. I think they reported loss in all states, at least since the last quarter. But there might be a glimpse of hope in this when you're looking at the USDA number. The pasture land values in all these Great Plains actually increased. This might be reflecting, but notice the timing. They conducted the survey in June, this June. So they're reporting essentially the June 2015 to 2016. So back in 2015, the livestock returns are still pretty strong. So I think that probably positively influenced their pasture land value estimates. I would not be surprised if you see a mild decline in pastures, but even in our numbers, you see that the low quality land decreased less compared to the high quality land. So I think the general trend probably will see that applies across the corn belts, maybe slightly to the Great Plains, especially the Great Plains are starting to grow a lot of corn and soybean as well. But the low quality land, which can derive income from recreational demand and also the CRP payments, might still be held a little higher, maybe at least for another year. But the CRP payments will adjust to the new level soon, so that support will be short-lived as well. Good question. Any other questions? Okay, so sales activity. So here, the majority of when you are looking at the land sale activity, we asked the respondents to say whether they see an increase in the sale activity in their region, in their territory, over the last 12 months, and whether they see it's more, less, or the same. This shows you the percentage breakdown by our respondents, and the number to take away is 61% of all respondents think that they saw a decrease in sales activity in their region. And only 10% reported more activity. If you look at historically, this is about the second highest that reported compared over the last 30 years. So this shows you the figure of Iowa farmland sale activity relative to last year since 1955. So the red line represents the percentage of respondents who reported less sales compared to a year ago. There is a cleaner version which shows you, which we conducted a sale activity index. So the index is conducted by percentage of respondents who said there's less sales. There's more sales minus percentage of people who said there's less sales plus 100. So if you see above 100, then that's more sale activity compared to a year ago. Below 100, it should be less activity. So when they're declining this index, which means there's less activity. So the bar you see are the same percentage increase or percentage decrease in Iowa land values over the years. One interesting phenomenon you can see is the percentage change. So the growth in land values and the sale activity track each other pretty closely. In a down year, when the land markets are going to move downwards, the landowners tend to hold the land and postpone the sales, which decrease the amount of the land available for sale, which decrease the the farmland sale activity, so the farmland supplies tends to be higher. It tends to be tighter in down years. And this is also true when you're looking at the total number of public auctions in land. This data is from Mr. James Knus from FCS. The line below, the orange line that you barely can see, represents 2016. But what is interesting is 2016 and 2015 has been at the bottom of this line. As in 2015, it didn't even show a seasonal pattern as it used to be in the high growth years in 2011, 2012. With the Chicago Fed number, it seems there might be some more interest and more activity, maybe at least in the central part of the state. So we may see this might go up, but still it's at a low level. So the farmland supply tends to be tighter in the down years. And when you're thinking about the supply-demand curve, less supply means higher land values. So that's why some people think the land markets should adjust quicker. The cash rent should adjust quicker, but we'll only see a 6% decline rather than 15%. So the limited farmland supply is definitely one of the factors. This is actually showing up when we ask the respondents to talk about what is the major factors that help push the land values high as a positive factor affecting the land markets. The highest one is a favorable interest rate. We still have the historically low interest rate. I think the Federal Reserve will meet today to talk about potential move. I think they are likely to move up even this month. But bear in mind, we are still, like I was talking with farmers, and one farmer in the audience made the comments that 2 times nothing is still nothing. So we are moving probably from historically low interest rate to low interest rate. The Fed won't raise the interest rate too dramatically, too rapidly, because they worry about the global recession given the chaotic situations after Brexit, after Italian votes, after South Korea, and there are too many uncertainty going on. And the U.S., we are not growing as fast, but we are the bright spot. We are looking at the area. So, and the limited supply, as I mentioned, is the second largest factor, and the strong yields are also one of the big factors supporting this, because when you are having a bumper crop, you help decrease the per bushel cost, which help change the margin a little bit. What is the negative margins, negative factors affecting land values? And the folks are correct to note the 40% of the respondents noticed the negative factor. The dominant one would be the commodity prices, lower commodity prices. But livestock losses is a new one that didn't show up last year but show up this time. So 5-6% maybe in the livestock regions are reporting this to be one of the big factors why they're seeing a decrease in land values. So if you look at the livestock prices, as I mentioned, they have been declining more than 30% over the last 2 years. So who bought the farmland in Iowa? It's still consistently, now this time we try to break down the existing farmers by existing local farmers and existing relocating farmers. And what we find is it's consistent with our perception that it's local farmers buying local land. So existing local farmers account for over 70% of all farmland purchased in Iowa, especially in northern part of the state. So in South Central, where you can imagine there could be more recreational demand for hunting, there are there are actually 33% are by investors, so which is understandable. So there are more investor interest in these areas. When you are looking at historically, a lot of people talk about that it's the investor driving the land markets. The investor put too much money and made the land markets, the cash rent too high for me to bid. But if you look at the land markets in Iowa overall, it's the local farmers buying local land. Yes, it fluctuates. So when farm income rises, the share of farmers buying land increases. Now with the farm income decreases, you probably will see more investor interest, because when prices decline, they typically set a threshold of the rate of return. So when the prices decline, then the cash rent needed to meet their rate of return target is lower. So they need less income to make sure that they get the desirable rate of return, which may increase some activity on the investor side. But another thing in Iowa is Iowa has the anti-cooperative farming laws, but I don't think that changing the picture a whole lot, because if you look at even in Illinois, which doesn't have this restriction, it's still the local farmers account for more than 60-70% of land purchased across the state consistently. A new question we added this year is who sold the land. So the farmland sales by seller types, so active farmers, retired farmers, estate sales, investors, and others. So what you can see is 53% of all farmland sold in Iowa coming from the estate sales. So when some landowner wants to retire, then he or she have a transition plan to go through this. And the retired farmer accounts for another 23%. And one thing I didn't mention in a buyer is new farmers only account for 3% of the total buyers, which echoes the seller types. When you are thinking about the active landowners and when they're doing the estate planning, is he or she going to give the land away to a stranger, to a new farmer? Probably not. And so now this USDA Secretary Vilsack is pushing a lot on trying to promote the land access by beginning farmers and ranchers through the FSA microloan program and things like those. I think those are helping the farmers, but still the majority of the land sales are not going to new farmers. Another thing to keep in mind is agricultural markets are really same markets. Only 1% of the land get on the market per year when you're looking at a particular county. So 1% of all acres in Iowa get on sales. And if you talk about the arm's length sale, where the transaction doesn't involve two relatives, it's even less than that. So when you are thinking about, but if you look ahead, there might be some possibility that we will see an increase in farmland sales. First, could be more programs by the USDA to help the beginning farmers, but also with the continued decline in crop prices, a lot of existing farmers think like farming is no longer fun. So you cannot make money every year. So there are actually anecdotal stories that more people are thinking about transition plans. Not necessarily mean they will sell the land, but probably will see more activity. There's also talks, that with the new administration, talk about repealing of the estate tax credit, but also with that, changed the law on stepped up basis. So the current law says if you're an existing landowner, if you delay your land sales till death, then you can adjust the basis from the original price you purchased 20, 30 years ago to the current value, to the current market value, which means you essentially don't have to pay the capital gain taxes. So if the new administration change that, repeal that, then which means you will still be facing substantial capital gain taxes because you're applying the prices that you paid in the 70s. Say you bought the land 20 years ago for $1,000 per acre. Now the land stands for $8,000 per acre. Originally it says you can adjust the basis to the new level if you delay to death. But now if you get rid of those, that probably will decrease the incentive of landowners to delay the land till death, so then you may see some more activities. But this is a big if in this scenario because this requires congressional approval. So, but let's see. Another thing we asked, and we added this time, is we asked, last year we asked, what do people are thinking about when they're answering high, medium, low quality land? What do they think? What is a high, medium, low quality? Last year we asked them to provide CSR and CSR2. And this time we asked them to provide CSR2 and corn yields because we already transitioned to the CSR2 system. One of the key takeaway is the high quality land is perceived locally. It has a local definition, has a local meaning. That one example is when you are looking at the average CSR for high quality land in South Central, it's 68. It's close to the CSR in low quality land in Northwest District. And if it's less so when you're looking at the crop yields, but still you can see the same pattern that the land quality are defined locally. When you are thinking about high quality land, you need to think about what is the area you're talking about. So that's why when you are thinking about the survey methodology, it's hard to specify a CSR range. Say you answer land value surveys based on CSR for this particular range that applies for all parts of the states. So another new part is we added the crop and farmland price predictions for a year later, 2 years, and 5 years later. So 2020, 4 years later. So what we're looking at is a lot of people are forecasting the cash corn prices and the soybean prices will improve gradually over the years. So they are forecasting less than $3.40 next year, but grow another 12 cents per bushel for 2018, and gradually move up to $4 for 2020. So it's good everyone no longer have the $7 illusion anymore, but when you're looking at the distributions of the crop prices, they do reveal there are some basis patterns that the north-southeast has a slightly higher cash corn prices because they're closer to the transportation network, so they have less of a basis adjustment in terms of transportation cost. So it's a consistent story of people are expecting corn and soybean prices to rise slightly, but not by a whole lot. So I'm viewing this as more of a stagnant or maybe slightly increase over the years as the global production adjusts to the new level to reduced acres of corn and soybeans. If you look at the farmland value predictions, I would caution you, I probably wouldn't take the numbers by literally. So here what you see is the first column is for those who provided the land value predictions, their raw estimates as of November 2016. So they're slightly higher, more bullish than the entire sample. So what we're talking about is roughly 400, so 55% of the sample who give us the predictions. And because when we are doing the land values, we take all the respondents. So people who give us the predictions seems to be a little bit more bullish down the land market. But when we are comparing this, I think my interpretation is essentially the respondents are predicting a more stagnant, maybe continuation of the current trends, or like a flatten out of the land markets. And if you notice, compare with the 2018 number with the 2017 number, they all are, the 18 number are all below the 17 number. So people are actually forecasting, due to the continuations of the crop losses and maybe the continuation of the low livestock prices, the land markets will continue to adjust slightly downward. So what we are reporting, what you are having is maybe a 2% decline from 17 to 18. And then they are forecasting a slight bounce back. So if you think about what this means is the majority of folks are thinking the land market will continue to maybe stay steady and slightly adjust downwards in the next year or two, but won't be much. And hopefully it will bounce back in 3 years of time, in 4 years of time. Which is consistent with another data point that I run a conference called the Soil Management Land Valuation Conference. The next year is May 17th, Wednesday, in Ames in Sheeman Building. It's regularly attended by 280 farm managers, appraisers, ag lenders. And next year is the 90th annual conference, the longest running at ISU. And at each year since 1964, they are asked to forecast the land values in May. So this May, they forecasted the land value to be less than $8,000. So a year before, their estimate was $8,100. So if you compare to that, they're forecasting a decrease in land values this year. They're forecasting a slight decrease in 2017 again, maybe a bounce back in 2020. So this is consistent with the land value estimates, the predictions we see in this story. So I think what they're forecasting is a mild decrease, a modest decline over the next year or two, then hopefully bounce back in 3 years and 4 years of time. So what they have is also the cash corn prices as of May. So in May, they forecasted the cash corn prices would be $3.75. I think a lot of farmers are hoping that we are getting this. The reason why they are getting a slightly higher estimate than actual is because the timing of the conference. So in May, there was a spring rally in the crop markets when the markets are concerning about whether there's enough supply and whether all the major regions will get the crop planted, and whether we get enough moisture in everywhere in the right place. So that created the weather rally, but it's short-lived. And this is also reflected in the Purdue. Purdue this year collaborated with CME Group, the Chicago Commodity Exchange, releasing a ag economy barometer. They're doing a monthly barometer which give you livestock, crop, and land markets outlook. And this is based on a national sample of producers. And what you see is the yellow bar is what you see where the percentage of people who forecast a decline in land values. So what you see is in May and July, the share of people who are forecasting an increase in land value increased precisely because of the rally as well. But again, now the majority of people are forecasting the land markets to continue to move downwards. And the share of people who are forecasting an increase probably are from the northern plains, where they see an increase in pasture land values. If we keep this into a longer perspective, my colleague Chad Hart used to show a historical corn prices and corn cost figure. And if we look at historically, even since 1970, since 1970 to 2000, you see the two lines cross each other. So the agricultural industry, by its nature, is a competitive industry where industry-wide there's zero net profit. So some more efficient ones will make money, some more inefficient ones will lose money. You will make money some year, you will lose money some year later. But over the last 10 years, in 2000s, we're seeing phenomenal growth every year. So everyone is making money every year, which is a good times, but not the normal times. If the farming is that easy, everyone would be farming, right? So, but now I think we're gradually adjust to the old normal. But after you see the $6, $7 corn, it's hard to see this the $3 for the prices. I have talked about the significance of this downturn, and this is a figure that I pulled from the portal I developed. It shows you the USDA estimates of Iowa farmland values since 1850. There are two farm crises over the last 100 years, and one of the most vividly remembered one is the 1980 farm crisis, because a lot of the farmers actually lived through those. But I would argue that there's another one in the 1920s. If we have to forecast what this farm downturn might look like, I think we will likely to see the trajectory to be more like the 1920s in terms of this is a long, drawn-out, modest adjustment to the normal days, as opposed to a sudden collapse of the sector in the 1980s. So in the 1980s, you see how steeply the land values have dropped. This is inflation-adjusted land values, but it shows you that every year you're seeing a 20%, 15% decline consecutively in the 1980s. I've talked about a whole lot of reasons why I remain optimistic about the future. One of the key things is I think it's useful to look at what happens during those downturns, but it's also very, very useful to look at what happened before. So in the 70s, actually, when you are looking at the inflation-adjusted net income, that has been declining 3% per year annually, consecutively for 7 to 8 years because of high inflation. So I've been reading Dr. Neil Howell's 1980 Farm Crisis book. He described the income gains in the 1980s as illusionary. So, but when we are looking at the 2000s, we are seeing real growth, 8% growth in inflation-adjusted income every year for almost 10 years. That's why a lot of people have strong balance sheets and working capitals to burn through, which help the whole sector to withstand the shock and weather the storm. Some of the factors is the amount of the leverage is low because the the lending limits, you cannot borrow at 85% of loan to value ratio, but it's maybe 45, 50%. You have a stronger government safety net. You have really favorable interest rate environment, and I think yes, there will be more problem for some of the producers. Overall, the sector should be able to go through this without the collapse of the whole sector. At the end, I want to remember one formula when you are thinking about how the land market might go. The land values can be thought of as the net present value of all income flows in the future. So simplistically, it can be thought of land value equals to net income or net cash rent divided by interest rate. So the interest rate, so it should be capitalization rate or discount rate, but you can think about this heuristically as the real interest rate on the farmland loans. Now it's roughly 2 to 3%, 2.5 to 3.5%. So what is useful for this formula is when you are thinking about how land value might change, you want to think about what will happen with farmland income. What will happen with interest rate? I just told you that the Federal Reserve probably is meeting today and tomorrow. They're likely to change the interest rate, and there's only one direction that will go. It's going up. Right? So the interest rate go up, the denominator increase, so the whole value will decrease. When you're looking at the net income, what is driving the net income when you're thinking about Iowa and Corn Belt? The corn prices probably will stay constant at the current level, maybe slightly increase a little bit, but still it's likely below or very close to the cost of production. So the cost adjustment, the cash rent adjustment is more sticky than the prices. When we are talking about the exports, which 1 in 4 rows of soybeans growing in Iowa and actually in the US goes to China. And half of the crop goes to overseas. So the trade is a significant portion of agricultural production, but now we are seeing new uncertainties of new trade deal rate negotiations, which its long-term impact remains to be seen, but you will not see, it's not the same that you are seeing a gigantic increase in the exports through the trade terms. When you're looking at the Chinese growth, which has been one of the big customers for the U.S. agriculture, China is growing at phenomenal rate, 6.5%, 6.7%, but the whole world expect China to grow at 7 or maybe 10. So, and when you're looking at ethanol used to be a significant factor boosting the 2000 run-up in corn prices and land values, but we are not seeing that this time. It seems to be peaked out. The demand is still strong, but it's no longer growing as rapidly as we see in the 2000s. So in net income, I think we probably won't see a substantial increase in net income, or maybe continued decline as the farmers to burn through the working capital they have, which means you have downward pressure on both ends in terms of both net income but also interest rate. So the land market is rational to decline for another year or two. In the end, I want to highlight here are 3 pictures. So on the top left is the already dead TPP. So the TPP is no longer there. China is actually pushing on alternative one, it's RCEP, which notice that it's one of the key features of TPP is China is excluded from this. And now there are trade agreements going on, but it's a trade renegotiation of NAFTA and other trade deals may impact ag policy and ag exports. My colleague Chet Hart, he has been studying trade for quite some time, and he has been thinking, hoping for that in the new administration trade renegotiation that agriculture will be set aside, because the trade agreements has been overall beneficial for the ag sector. We have seen phenomenal growth of ag products produced in the U.S. going to the rest of the world. On the top right is the Chinese president and the new ambassador to China, our Governor Branstad. This is a picture that actually taken in Muscatine, Iowa in 2011 when the president was still vice president, holding a picture that they took together in the 1980s when the Chinese president was still a county official, a county leader 30 years ago. So the Chinese are amazed that after 30 years, you can still, not only the same farm family are still in Muscatine, the governor is still the same person. But this shows you that the Governor Branstad probably has the best wishes from both nations, because it's rare for a politician in another country to have a personal relationship with the leader of he is going to be an ambassador in, right? So, and I guess that Iowa State hopefully will be more famous in China as well. So here, the messy figure here is pulling through the Federal Reserve report is the dot plot they call, is showing you their plans of interest rates plan. As they are currently at really low level, but over the long run, meaning that by 2020, they hope to raise the interest rate to 3%. Now it's 0.5% for the federal funds rate. It's still very low compared to the 1980s. And this is always the plan, and how quickly, even whether they can carry out this step is probably not, they may not be able to do it quickly as this step. The last thing I want to mention is the land value portal we developed that I hope that you can help advertise and encourage interested landowners, ag professionals, and farmers to use. We already got 300,000 hits. And what you can do at this portal is you can pull all the information that I presented across the 4 different sources: IC, USDA, Chicago Fed, Realtor Land Institute, and you can cross-compare the land values across different sources. You can pick your favorite counties and compare how land values, how in that county compare with the district, compare with the state, compare with the high quality land in one particular district. You can evaluate where the hotspots are in terms of the high land values, where the high growths are, how does that compare to a particular district or region. And the URL is really easy to remember. It's card.isd.edu farmland. So CARD stands for Center for Agricultural Rural Development, and CARD and ISU Extension and Outreach are the primary sponsors of this survey. And lastly, this is a figure that I've been showing Iowa farmers for a while that shows that we took our job too seriously. The car on the right is Chet Hart's car. He already has a nickname of Dr. Doom. So he has the plate is crop market. That's where he specializes in. So I got the bad influence. I bought the car last year. This is mine farmland. So, but I have to say that I really like this because the red is not only good for cyclones, but also good for Buckeyes. Thank you, and I welcome any questions, and thanks a lot for coming here.
So you'd mentioned the step up in basis possibly disappearing, and I've heard about maybe the 1031 disappearing or the interest rate on farm loans disappearing too. What do you think about those items?
So with the new administration, there are a lot of talks, and I think going through, for example, the step-up basis, for a lot of those changes, it requires congressional approval. So there are a lot of talks and hypes of different interest groups trying to lobby the incoming administration, but it's how this will play out remains to be seen. But I don't think the interest rate on farmland loan will disappear. The monetary policy typically is semi-independent from the executive branches. So the Federal Reserve is mainly the one who makes the calls on the base level. Then the lending institution will adjust to those. Don.
Wendell, I know this isn't maybe your area
Sure.
specifically, but you might have a philosophical answer.
Sure.
We have noticed over the years that cash rent values tend to follow the land values,
Mhm.
but on a much slower or maybe lower percentage scale.
Yep.
Can you give us your thoughts on where you see cash rents going in the next year or so in relation to
Sure.
your land values?
So I think, yes, cash rent will adjust to the land values, but so the cash rent, I'm thinking it has already been declining, and I think will continue to decline. But you're right that the cash rent movement is very sticky, especially on the downward trend. It's more sticky because it only takes two bidders to make one landowner happy. And we heard the joke that if you're talking about farmland sales in the auction, the perfect scenario is you have two farmers who both have money but hate each other. So you don't need that much to make the movement. And now one of the unique features of agriculture is there's no vacancy. There's no land left unfarmed. If you are not willing to give me the cash rent, there are some new farmers and some other farmers who are willing to. But what your observation are correct that you mentioned the rent to value ratio, the cap rate have been declining over the years. And I think that probably the decline will either slow down, maybe uptake a little bit with the land prices declining. So the decline is mainly a result of the farmland prices rises. So because, yeah. Thanks.
You mentioned obviously the difference between the low value and the high value land.
Yep.
That the low value is not dropping as fast.
Yep.
Do you expect that to continue? I mean, it's not an unusual trend, certainly.
Yes. So last year we have the same thing as well. So last year the land values of the high quality, I think, declined by more than 5%, and low quality only declined by 1%. Last year is even the contrast is even stronger because the livestock returns could also affect this low quality land prices. But this year, even livestock sector are going through some tougher environments, so that's why you see maybe the differences are getting smaller. I expect this at least to continue for the next year. CRP is a big factor as well, but once we go through maybe 2 years later when CRP is fully adjusted to the new price environment, then we probably will see much smaller payments from the CRP program, which will help, which will decrease the demand for the low quality land. Go ahead.
I guess one other is the investor interest. It seemed to be when land was shooting up, one of the many factors was that people didn't see other good places to put their money.
Sure.
The non-farmer investor especially, perhaps.
Yep.
What do you see happening there?
So I have been actually, in October I was presenting at one of the Agri Investor Forum where a lot of the investors of the pension funds and the private equity, they're thinking of farmland and agriculture broadly as one of the inflation hedging assets in addition to their portfolio. So they are allocating 1% of the money, the whole pension fund, to agricultural real estate. What they're buying is mainly farmland, but they are not only buying farmland. So one of the examples is there's one investor. They're actually buying a whole lot of specialty crops, walnut, almonds in California, but they're not buying in Iowa because Iowa has the anti-corporate farming laws. They cannot own land easily as using the capital they raise, the farm they raise above 1,500 acres. So they're avoiding these 8 states which have the anti-corporate farming laws, but they're buying some other land in Illinois. So what they're having is, with the decline in the land values, a lot of those investors tends to have a rate of return benchmark. So with the price declining, then there's a higher chance they can meet this rate of return benchmark because the cash rent is not declining that rapidly. Prices are, so the rent divided by value will increase slightly. That probably will prompt some more interest. Plus, when there are some where there are less alternative investment, then they're more interested. But now the stock markets are rising pretty rapidly, so it remains to be seen. But one of the things is you cannot flip farmland. So you cannot just buy today and sell next day. At least not. There's a long-term holding aspect to it. So even the investors are not buying to flip the farmland. They typically hold this for 10, 20 years. For things I know, a lot of the investors actually, when they're buying cornfields and soybean fields, they actually try to find some reliable renters to rent it out. So they get the cash rent as a steady income. But when they're getting the specialty crops, that tends to have a management company to manage the whole thing. Any other questions? China would be fine too. Someone asked me whether Governor Branstad can withstand the poor air quality in Beijing. And I learned that Governor grew up in Iowa and stayed here probably his entire life. So my gut feeling is no. So I hope he has strong lungs. But China has high-speed rails now. He can quickly get out if he needs to. So.
Well, actually, since you mentioned that,
Yep.
I noticed the province next to the one where you grew up is the one where there's apparently a proposal to put in a model Iowa-style farm.
Oh, yes.
How
So.
much do you know about how like Iowa farmland the land is there?
So, yeah. So that shows the Economist has way too many slides. But here, what the province you're talking about is this province. It's Hebei. So this province is actually a sister province with Iowa since 1981. That's why the Chinese president visited Iowa. So because he was the leader of the county in that region. So in terms of the soil quality, this part close to Russia and North Korea has a black soil. It's very similar to Iowa. So here we have some, but the quality is not as good as this northeastern part. So the northeastern part of Iowa, China actually has few people by Chinese standards. So there are farms the farmer actually are farming 100 acres U.S. acres. So they have some larger farms. But when you are talking about in my hometown and in this province, there are way too many people, so the average size probably is 2 acres. Okay.
I'll ask
Sure.
a China question, out
Sure.
of curiosity. How big a deal is it, the President-elect's comments with Taiwan.
Oh, it's a pretty big deal. I think the phone call didn't raise some like eyebrows and the criticism from China, but President-elect also talked about this year is why do we even have to adhere to one China policy? That is crossing the line by the Chinese standards. It's because that if you name one core interest internationally that China has, that's the one China policy. So the White House actually reaffirmed U.S. stance 3 times within 10 days on this. It says U.S. is not changing the policy, but there might be a bumpy start in the relationships. But I think overall, I think a lot of the analysts are hoping that there are because the strategic relationship are not only important for the 2 countries but also for the world, so things cannot go wrong that bad. So in the long run, the 2 countries will get along. So they're forecasting a bumpy start and betterment in the relationship. So I hope they're correct. So let's see.